Okay, there we go. Now we're recording. Okay,
Okay, let's go.
everyone, thank you. Tonight is Thursday, December 22nd, 2022, and we are here tonight, Triangle Blockchain Development Meet. Tonight we have a special guest, and it's Eric Moore, and Eric will give us some updates regarding the SHLDQ situation. And without further ado, he's here, and he'd like to explain a lot of things to us tonight. So, Eric, you go right ahead. You have the floor, sir.
Okay, thank you, Blair. Thank you, everybody, for joining the call tonight, rather. I'm going to give a quick update based on the events that happened on Monday. And most of you, or all of you with E-Trade, seeing the actual value of your holdings, mainly the bonds. I talked to Blair, Rod, the guys in the group, and I said we need to do a quick update so people will understand the payout process for the bonds and the stock, so you'll know what to look for and you won't continue to be confused and misled by your broker and or the people online that you happen to be following on stock twits, seeking alpha, or Reddit. So what I'm going to do is Blair's going to put up a quote, but I'm going to read this quote really quickly. And the quote is from Charlie Munger. He's Warren Buffett's partner for the last 50 or 60 years. And he said in this quote, and Blair's going to put this quote up in a second. He said, "Why should it be easy to do something that, if done well, 2 or 3 times will make your family rich for life?" What he was talking about is value investing. And it is not difficult math to understand value investing. It's not difficult anything requiring a higher level of education. It's not difficult. What's difficult is what you went through Monday. What's difficult is the waiting. What's difficult is not knowing exactly when the payout is going to happen, like specifically. What's difficult is not knowing exactly how much. The reason people are not value investors is not because the math is hard to understand or calculate. It's difficult to be patient. It's difficult to ignore the anonymous people online who appear to be in unison in saying that SEARS is worth nothing, the bonds are worth nothing, you're going to lose your money. That is difficult for people who don't understand the math and people who do not have the temperament. You have to be grounded in the math the way you're grounded in your religion, the way you're grounded in knowing who you are and what you are. You cannot, nobody can walk up on you and all of a sudden tell you that you weigh 45 pounds. You know how much you weigh within a certain amount of pounds, and you can get on a scale and prove how much you weigh. No matter what they told you, what story they said, they could not convince you weigh 45 pounds or 65 pounds or 95 pounds. They just couldn't do it. And you have to understand the math and the key components of any investment that well so that you're not counting on outside noise. And that's what we call it, outside noise. So the most important thing people want to know about right now is the time frame for the payout or the payout announcement. So what I'm going to do before we get to that, which I'm going to do in about 5 minutes, I'm going to give you a quick example of what value investing is with a stock that everybody is familiar with. And I'm going to explain to you why this SEARS process has been so difficult for most of you, and it's going to hopefully help you going forward. All right, so Blair is going to pull up a screenshot of the book value of Tesla stock as of Monday of this week. And everybody is very familiar with Tesla, the stock Tesla. The book value of a company is the net worth of a company, assets minus liabilities. That is what book value is. And I hope everyone is taking notes. Please take notes on this because I get a lot of emails, a lot of texts from those in this group and those in other groups. And they keep asking me about other stocks, about other bonds, so on and so forth. And I'm going to show you a simple way to see if you're being beat by Wall Street. I'm going to show you a simple way. So the book value of a company is the net worth of a company. assets minus liabilities. And so, for example, on Monday, Tesla stock was selling for $150, $150.23. This is from Google. This does not take complicated research. This does not take reading thousands of pages of bankruptcy documents like what I did for SEARS. Most investments are 99% easier than SEARS Holdings. Bloat it up a little bit for me, Blair. So this is from Google search. I put in the search, Tesla's book value. It's going to blow some of you guys' mind. It says Tesla's current price is $150.23. Its book value per share for the quarter ended in September 2022 was $12.62. Hence, today's PB ratio, which is price to book, is 11.91. That might sound like a foreign language to you. I'm going to make it very simple. Book value per share is how much the stock you just purchased is worth if the company deducts their assets from their liabilities. So people who paid $150.23 for Tesla stock on Monday were actually buying something worth only $12.62. Now, E-Trade, Schwab, Morgan Stanley, SoFi, they are not telling you when you press the buy button to pay $150 for Tesla that you're buying something that is currently worth $12.62. If you knew that, you probably wouldn't purchase it. Some of you are doing Christmas shopping. I doubt you would pay $150 for any gift that you knew was only worth $12.62. A value investor looking at this would only buy Tesla stock if it was trading for $4, $3, or $5. It's trading for $150 and it is currently worth $12.62. It takes 30 seconds, 20 seconds or less to Google to find out that you're paying $150 for something worth $12.62. A value investor is looking to do the opposite. We're looking for something we can buy for $12.62 that is already worth $150 the day we buy it. We're not looking to purchase it in hopes it will one day get to that price. So the people that are buying Tesla are paying paying $150 for something currently worth $12.62, and they're hoping it eventually gets to that price. That is not even gambling. It's complete lunacy. But if you don't know how to value a company, you're doing this unknowingly on a regular basis. So now we're going to get to SEARS. The value of SEARS Holdings today, according to the numbers and all the publicly available documents, assuming about 55 million shares, is about $100 a share. That is the value. That does not mean that will be the payout amount. The value of Tesla is $12.62. The price as of Monday was $150. As you can see, just because the price is very high or the price is up there has nothing to do with if that's the actual value. You have to learn how to value a company or you're going to lose your money in the stock market. It's that simple. They do not teach people how to value companies. They teach you how to buy and sell, and they teach you how to trade. But if you're purchasing assets that are worth $12.62 and you're paying $150, you are starting off way behind. A value investor starts off ahead. We only purchase when it's at least a 50% discount to value, at least 50%. So I'm going to go give you an example and show you the process of what's going on with the bonds and a process of what's going on with the stock really quickly. And the example we're going to use is a company called Tenneco. Tenneco makes those Monroe mufflers, and they do the suspensions for some of the major companies. And I'm going to tell you what happened with Tenneco. We purchased Tenneco for around $350 or $4 a share maybe 18 months ago. I looked at the book value, I looked at other metrics, and I saw that the company was worth at least $20 to $25 a share. But the stock was only trading for $3.50 or $4. Most of the time in cases like that, eventually people figure out how undervalued the company is, and larger investors will either buy the company out or they'll buy a whole lot of the stock, and they might go public and start telling people how undervalued the company is. So value investing is purchasing early at a discount when others don't know it's actually a discount. And then you're waiting for the rest of the world to figure out what you figured out early. We are so early to SEARS Holdings because people are not doing the research and the work to figure out what it's worth. It's too difficult to understand what SEARS Holdings is worth for anybody who does not have the expertise I have, plus some other expertise on top of it. So anything difficult to value will be really cheap. Anything that everybody thinks is popular, anything that's being heavily promoted, is going to probably be overpriced. Tesla is overpriced by 12 times its actual value because everybody knows about it, because everybody bought the stock, because Elon Musk is promoting and marketing. He sold 40 billion of his stock just this year. He knows those metrics I just showed you. Carvana, another company that's down 99% and still overvalued. Their CEOs sold $5, $6, $7 billion worth of stock. Eddie Lampert has sold no shares of SEARS from a high of around 140 all the way down to 1 penny. So what happens when you get these buyouts and these liquidations? And you can see this right here with Carvana. I hope none of you were in this stock. Reason you want to know the book value of the company so you can know what it's actually worth, not the stock price. You want to know the actual value of the company. A stock is just a fractional piece of ownership in a company. So the stock represents ownership in a company, and it has an actual value that can be discovered on Google. So you should never purchase a stock if you don't know what it's worth. If you want to gamble, roll the dice, play lottery, that's one thing. But most of you who bought Tesla this year and last year, including some of the groups that I did classes for, I tried to explain this. There is no way something worth $12 that was selling for $300 last year is going to stay at $300 because eventually the numbers coming in and people will figure out it's only worth $12 or so or less. So Carvana was one of these companies as well. If you look up the book value of Carvana, it's probably a negative number at this point. But Carvana was over $300 earlier this year. So the people who looked at the book value of Carvana earlier this year, regardless of how much the stock was going up, they never purchased it. Value investors, real value investors, do not purchase without understanding the value. All right, so Blair, do me a favor, pull up the Tenneco document. So Tenneco was bought out for $20 a share. I saved 1 share of Tenneco. And this is the buyout process that SEARS Holdings is getting ready to go through. When they announced the payout, the stock went, I forgot where the price was. The stock price went from where it was, because I paid around $354, and it went to roughly $19.99 or $20. It went to the payout amount. Then they took the stock symbol, which was TEN, which is Tenneco. They took the stock symbol. Let me blow it up for me a little bit, Blair, the top part, the very top, the bottom, yeah. So they took TEN, which is the stock symbol, Tenneco. They took that stock symbol and they put the QSIP number for the stock in my account, just like what you see with SEARS Holdings right now. Pull down, Blair. Yeah. So that's what they did. Now, when the payout came, they took the QSIP and they sent me this E-Trade alert with the QSIP number because I couldn't trade the stock anymore because they put the QSIP up and it was pending payment. When it's pending payment, they don't want you trading because if the money is wired in on a Monday and you sell the stock Monday at 4 o'clock and the money wires in Monday at 3:30, they could give you the money and the stock to the person who bought it. So to prevent the mix-up, they simply stopped the stock from trading. They put the QSIP to the stock and they don't allow you to trade it because it's pending payment or pending liquidation or pending some type of corporate merger. So if you can scroll down, you'll see it says liquidated due to corporate merger. That's very similar to what we're waiting on. And right here, it shows that I was paid $20 a share in the liquidation, or $19.99 for the last share that I held on to. And I got paid out in cash. So this is the process. So when you see them wipe out, quote, the stock and put just the QSIP number, or they put ESL I4, or they put reorg, depending upon your broker, it's because it's pending payment in stock, in cash, in other securities or warrants or what have you, or all of the above. So this is the normal process. So on Friday, when the bonds zeroed out, a bunch of you contacted me and I said, hey, this is the process. That means the payment is coming very soon. We were in the CBL bankruptcy, which was a mall REIT. When that bankruptcy paid out, they zeroed out the bonds and they paid us the next day. In this case, they zeroed us out on Friday, and it was a notification sent to E-Trade from somewhere that we were being paid out. So the payout amount reflected in our accounts. And I saw how excited everybody was because everybody called and texted me, so on and so forth. Now, that is the normal process. E-Trade informed me that they were contacted. They didn't say whether it was the DTC, the bond indenture trustee, the liquidating trustee. They didn't say who. They said we were contacted by an official source, and they told us that that was the value of the bonds and it needed to be reflected. And it's pending payment. So on Monday, that's what they were informed of. But we were still buying bonds on Monday. So the bond department that buys and sells bonds clearly hadn't been informed, because the prices of the bonds were still at the same price they were at on Friday. For some reason, I don't know what caused that information to get there early, but E-Trade has the correct information. The bonds are worth par, and the bonds were trading at 102. And if everybody saw those large numbers in their accounts, they're only reflecting what the payout is going to be. So what to expect next? When you see the bonds zero out again, that means payment is pending. It could be 24 hours, it could be 48 hours, 72 hours, but most of the time it's 24 to 48 hours when everything zeroes out. The best thing to do is, if you see something like that, don't run to Reddit, don't run to StockTwits, call your broker, E-Trade, or whoever it is, and say, hey, my bond's zeroed out. Do you have any more information? Is there a payment pending? Could you give me some more information? That is the normal process. And then you'll get a notification. Scroll down a little bit, Blair. Get a notification just like this, and it will be informing you that the payout has been made. And it'll say something. Scroll down a little bit, Blair. It'll say something. Up. I'm sorry. It'll say something similar to this right here. And this is actually from my account when we purchased Tenneco. It was liquidated due to a corporate merger. So it's going to be something to that effect. The bonds enter the stock, and it'll be a notification. So I'm going to talk to you really quickly about the time frame, and Blair is going to put up document 5370-1. This is PDF page 67. And by the way, regardless of the date of a court order, if it's an official order of the court, it doesn't matter what date is on it. You might have been divorced in 1991. If your divorce says you're divorced in 1991, you're still divorced in 2000 unless you remarried the person. So some of you say, oh, well, this is dated this date, or this is dated that date, or other documents came after that. Completely irrelevant. This is the amendment to the Chapter 11 plan, and this tells you when the payout announcement is and what's going to happen. So I'm going to read this for you so you'll know. You don't have to speculate. You can go by the order of the court. And it says, and I'm going to call this number out for the people who are listening. It's document 5370-1. It's page 67, filed October 15, 2019. And it says, I'm going to go to C. As soon as reasonably practicable after the liquidating trust assets are transferred to the liquidating trust, but in no event later than 120 days thereafter. The liquidating trust shall make a good faith valuation of liquidating trust assets and liquidating trustee and the liquidating trustee shall apprise in writing the liquidating trust beneficiaries of such valuation. So we are liquidating trust beneficiaries. The beneficiaries of a liquidating trust are the remaining creditors of the bankruptcy. This is not difficult. You can Google the purpose of a liquidating trust and it will say exactly what I'm telling you. The challenge in this investment is not the complicated legalities. It's that most of you are not Googling the simple things. A liquidating trust exists for the sole purpose of distributing the remaining assets to the remaining creditors. If there were no remaining assets, if there were no remaining cash, if there were no remaining businesses like Kenmore, like the cash from Die Hard, the $1 billion from Innovel Solution, the $1 billion tax credit, the $1 billion sold in real estate, the $718 million in the claim ESL gave. If there was nothing left, the trustee would not exist. A person who dies indigent with no assets, they don't open up a probate and they don't tell you we need a valuation in 120 days. A person who has no money has no probate because they have no assets. So a bankruptcy estate with no assets left have no probate. And our probate is called technically a liquidating trust. So all the assets go into the liquidating trust and they distribute to the remaining creditors. The bondholders are owed roughly $700 million. The Pension Board Guarantee Corporation, which is the pension, they're owed $870 million. So that's a total of about $1.7 billion. The cash, according to publicly available documents, it's at least $5 billion in cash remaining. And all this is documented. It's all in the court record. I've already given you guys these documents. So that $5 billion in cash minus the $1.8 billion covers all the bondholders in full. The remaining businesses and the remaining cash belongs to the shareholders. That's how I know we're whole. I'm not guessing. I'm not hoping. I'm simply doing the math. But everybody here should have Googled the purpose of a liquidating trust, and it'll simply tell you what it is. So once you saw that the liquidating trust was set up, you know that there are going to be assets to distribute. When you saw in the last video, the default on the bonds was withdrawn. You do not withdraw the default on a foreclosure of a house unless you paid off the house or you've caught up the payments. If you are in default on your mortgage, you do not get a letter from the mortgage company telling you you are no longer in default unless you've made a payment or paid the house off in full. So these are all documents that are publicly available that we put on the video. This is not Eric's thesis. This is not Eric's thoughts. This is not what Eric hope happens. This part is not complicated at all. Anything you don't understand, just like you do at anything else, you can ask Siri or you can Google. But if you're lazy about your money, you're going to end up broke. I don't care how much money you get from SEARS Holdings or any other investment. If you're lazy or you're focused on the wrong thing, you're not researching what matters. What matters is the math, not what they're saying online. So you have to make sure that you focus on what's important and what can be proven. Anything that cannot be proven, don't waste your time on it. So we know that 120 days from the transfer of the assets to the liquidating trust, the effective date is when those assets transferred. Those assets transferred on the effective date, let's round it to November the 1st. 120 days from November the 1st puts us at the deadline of March 1st, 2023, which is not too long from now, right? It's roughly 65 days or so. The challenging part for me is I could have done this investment alone. I didn't have to write any articles. I didn't have to tell anybody. I could have kept it private. I decided to share it with my close friends and family, of which some of them shared it with their close friends and family. So it's very challenging when I'm giving you the information, telling you what to Google, and all people want to know is when it's going to happen. So I'm going to tell you what value investors do when they're waiting on a payment or waiting on a payout. This is what you do. You spend your time looking for the next great investment so you don't take this money and blow it or spend it. If you think every athlete, every entertainer, every singer songwriter, and every lottery winner is dumb, not intelligent, and don't know what's going on, and that's how they went broke, you're going to be sadly mistaken. I promise you, you will be one of those people, because the people playing for millions of dollars are going to be on a level you won't understand. They're going to be dressed in suits, and they're going to be called lawyers, trust attorneys, stockbrokers, financial advisors. That's what the titles they're going to have. And they're not going to have to do anything illegal to get your money into their pockets. And you may or may not know that you've been beat. Because if you're buying companies like Tesla, not knowing they're only worth $12.62 and paying $150, eventually you're going to run out of money. So the challenging part is doing the required study, having the right temperament, not looking at the stock every day, not looking at the bonds every day, doing the work you have to do to build up the financial muscle to lift the millions of dollars that you're going to have. Right now, you can't lift 400 pounds on the bench, but you know that 400 pounds is being loaded up on that bench right now. They're putting the plates on each side and they're clacking. And you think you can lift 400 pounds, and we know that you can't. And it's going to fall on you. The book you need to get, Blair's going to pull this up. It's a book called How Buffett Does It by James Pardoe. You need to study this book like it's the Bible. You need to focus the next week, 2 weeks, 2 months, and master everything in this book. The people who master what's in this book, it's got pictures, it's very easy to understand, it's no complicated, no hard, long words. You have to study this book like you studied to get your college degree. If you master these 24 principles, I promise you, the people who do it and the people who don't, in just 12 months from the payout, 24 months, you're going to be able to tell the difference. If a financial advisor, a stockbroker walks up on you and tells you, I got this hot stock for you, I heard you one of the SEARS millionaires, the first thing you're going to say to him is, can you show me the book value of the stock before I purchase it? And if you ask him that question and he can't answer it, you probably should tell him, have a good day. So the time period is very important. If they pay us tomorrow on the bonds, oh, by the way, let me explain this really quickly. You don't have to follow the court record anymore. We officially exited bankruptcy today. The final decree, which is the document that takes all the remaining subsidiary businesses out of bankruptcy officially, that happened yesterday in a hearing. That was approved. So there is no reason to follow the court record. There's no reason to email the court documents to me, to Blair, to Rock. We don't need the court documents. We're not in bankruptcy anymore. Our assets are in the liquidating trust. They have until March the 1st in writing to inform us of how much those assets are worth. So I've done a valuation for you already, but before March the 1st, they're going to have a website up. They're going to notify the brokers, and they're going to inform everybody of what they're worth. If you can purchase bonds prior to that time at these prices, knowing that they're worth $1,000 each and they're selling for 25 or 30 or even 40 or 50 or more, it's an ongoing opportunity. And I want to make sure this is clear. We didn't do the disclaimer before, but the information here by me, Blair, Rod, and others, it's not financial advice. It's simply my opinion, my information. I'm sharing some of my research with you. So if you want to do your own research, talk to your financial advisor or whoever, but make sure they're giving you actual valuation of what you're purchasing. So before March 1st, you're going to get a website, you're going to get a notification, and you're going to most likely have payment on the bonds. Now, here's some good news on the bonds. The bonds, the October 15, 2049 bonds, by the way, the date of the bonds means nothing. The bonds, that does not mean you're getting paid in 2049. The bonds are paying out in cash. If the date changes to 2099, That does not mean you're getting paid in 2099. The bonds matured in 2019, and they extended the date for settlement. By the way, you don't need to read the bond document, and it tells you the settlement date. That is not the payout date. All bonds have a settlement date. So you don't want to try to research stuff you don't understand or don't know anything about. You can call your broker, talk to the broker, and say, hey, what does the settlement date mean? If you don't pay any attention to what's being posted online, you won't get misled. If you have a question that's related to the bonds or the stock, just pick up the phone, be patient, and call the broker. You might have to wait on hold for 10, 15, 20 minutes, but you need to ask the proper authority. The reason this misinformation exists so much is because they know there are a lot of new investors. The new investors who invested during the pandemic are down 50, 75, 80%. Wall Street preys on your lack of research and your laziness. They prey on you. Anything popular is probably overvalued. The more popular it is, the more overvalued it's likely to be. So if you hear about a popular stock that everybody's talking about, you probably don't want to invest in it. You want to look at the book value. And if you can see in the document we had up before, they're talking about the book value of the liquidating trust assets, which is the net worth. I assure you, based on publicly available documents, it's at least $5 billion cash in there. And we went through this on previous videos. So I'm not going to be here all night. The book you want is by James Pardo, How Buffett Does It. You want to master these 20. It's not a long book. It's very small, got pictures in it. It's very, very simple. If you read this book and study it and take your time and learn value investing before your money comes, I promise you, you will thank me for the rest of your life. You cannot build generational wealth receiving a lump of money and not knowing how you made it. You have to know how you made it. You have to know why SEARS Holdings worked and the other investments you're in are down 50, 75% like the rest of the market. You have to know why Mr. Cooper is up 6, 7 times the money. And my value investing students who bought that are up 600% this year. The people who bought Tenneco with us, they're up 500, 600% in a year where the market is down 25%. The best value investors are making a fortune right now. And SEARS Holdings is the best value investment I've ever seen. The problem is you're new investors, and most of you are probably traders, or most of you have not invested before. You have to be patient and you have to read and study. If you don't read and study, you will worry me, Rod, Blair, and other people when you can go learn this information. It is extremely important. It is extremely important that you read this book. And once you read this book, then you can move to chapter 8 and chapter 20 of The Intelligent Investor. But this is basically what Warren Buffett does in layman's terms. It takes discipline to be patient and wait, but you want to be looking for the next great investment, and you want to be planning your financial future. You don't want to be waiting on the money, freak out, and go spend it all and think that you're going to find another SEARS Holdings. I promise you, you probably won't in your lifetime, but you need to know how you made the money. If you don't know how you made the money, you won't know how you lost it. So those things are very important. So that's where my focus is. I'm not worried about the payment coming. I know it's coming. I'm not worried about how much. I know it's coming in full for the bonds. I know it's going to be a big payout for the stock based on the math. And you want to be in a position where you're okay if you get no information, because there is nothing else to discuss at this point. If it wasn't for Monday and giving you a taste of what it's going to look like. See, a value investor experiences what you guys experienced on Monday already, because we know what it's worth. But when they flashed you actually how much your account has and what you're really worth, the feeling you got was euphoric. But a value investor feels that when they purchase. When I buy bonds, bought them for 1 cent on a dollar, 2 cents on a dollar, I feel that same feeling because I know what it's worth. I'm buying something for $25, I know it's worth $1,000. So I feel that when I purchase. And you make your money when you buy, not when you sell. A trader can only make his money when he sells. A value investor makes his money when he buys. And the key thing is having the temperament and the patience to block out anything that is not math. If it's not math related about Sears Holdings, the bonds, the stock, you have to block it out and not waste your time. Take the time you spend on Reddit, Seeking Alpha, StockTwits to study this book. And if you want to go to the second book, go to The Phoenix Approach by William J. Grace. But you have to master that book. That simple book will save you millions of dollars in the future. And go through your portfolio tomorrow. And if you own anything where the book value looks like that, the assets minus liability, I would sell and sit on cash, or I would buy Sears Holdings bonds. That's what I would do. I wouldn't own any other stock. If you don't know what it's actually worth, you shouldn't be in it in the first place. You have to understand what you own. Blair, I had another slide, I think. I can't remember the slide, but I'm going to read something and we're going to go to questions. I think I'm done. I might pull that up before. Let me read you guys something that I want you to look up for yourself. I'm going to read this to you. Let me get my light. Now, this is the document that proves, among others, remember this. I want everybody to Google the purpose of a liquidating trust. If there were no assets to distribute to us, if we were not beneficiaries, there would not be a liquidating trust. The admin fees have been paid. The pension has been paid $10 million already. All of the assets, if you go to the previous video, I explained that 91.05% of the liquidating trust assets go to the bondholders and the pension. And we're on a pro rata basis with the pension. And remember the argument I made. There is no way that the pension is letting $880 million go out the window. They're getting paid and we're getting paid. And you can rewatch these videos, especially the previous videos, because we answer a lot of the questions. So our timeline is at latest March 1st, 2023. The whole world is going to know what you guys know already. There won't be any bonds available at that time. And if they are, they're going to be selling for the price you probably saw Monday. Because once it's easy for a layperson to see how much everything is worth, the opportunity will be gone. So that's what I want to make sure I'm being clear. This is an ongoing opportunity. If the bonds don't pay out next week and they're still available for $25, $30, $40, why wouldn't you continue to purchase? If you know it's worth $1,000, why wouldn't you pay it? Why would you buy any other stock? If you can buy something for $40, knowing it's worth $1,000, and on March the 1st at the latest, they're going to announce what that stuff is worth. The bonds could actually pay any day now, because the bond indentured trustees are different from the liquidating trust. Clearly, somebody told E-Trade what those bonds would worth, because no other bonds had that so-called glitch. They were only the Sears bonds. I'm expecting that payment to happen any day. And we are no longer in default. And the next payment on the bonds is actually due January the 15th. The next payment on the bonds is due January 15th. But because those bonds have matured, I'm speculating now that they're going to have to pay those bonds off. Because if we're not in default and an interest payment is due on January the 15th, they'll probably have to pay them off before that date. But that's my speculation. But the bonds pay semi-annually. They pay June 15th and January 15th. I've owned those bonds since 2016. And they are semi-annual payments and they have matured. The 2018 bonds and the 2019 bonds have matured, and both are no longer in default per E-Trade. I'm going to read you something very short, and I'm going to be done, and I'm going to take some questions. This is document 2507. This is document 2507, page 70, under binding effect of the sale order. And everybody remembers that there are two plans in a tax reorganization. There is a liquidating plan, and there is a reorganization plan. The reorganization plan is the asset purchase agreement. That's document 1730. Document 2507 is the court order that approved the asset purchase agreement. So these are the findings. So this is what the order says. Document 2507, page 70, paragraph 52, binding effect of the sale order. The terms and provisions of the asset purchase agreement and this sale order shall be binding in all respects upon and shall inure to the benefit of the debtors, their estates, and their creditors, non-debtor affiliates, any affected third parties, all holders of equity interest in the debtors. Equity interest is stock. All holders of any claims, whether known or unknown, against debtors. Any holders of claims against or on any portion of the acquired assets. Let me say that again. Any holders of claims against or on all or any portion of the acquired assets. That means that our claims and our liens went to Transform, because if these assets were purchased free and clear, this line would not be in the sale order. Let me say it again. Any holders of claims or on all or any portion of the acquired assets. That is the paragraph that proves that our claims, our liens, the non-debtors, third-party beneficiary, they say claims whether known or unknown. All of those people benefit from the sales transaction. If Eddie Lampert purchased these assets by himself, there would not be a liquidating trust because there's nothing left at Sears Holdings. It's all been liquidated. The assets at Transform are also property of the estate, and that is what they're giving back over to us and the remaining creditors. The only purpose for a liquidating trust is to distribute the remaining assets of a bankruptcy estate. If there were no remaining assets, there would be no liquidating trust. That is a very simple argument that Wyco researcher Stephen Baker and all of these anonymous people, they will not come on this Zoom. They've been invited for 4 months, 5 months, but they stay anonymous online. And unfortunately, some of you believe them. But that is the question I pose to them and everyone else. If you Google the purpose of a liquidating trust, everything they're saying goes away. Liquidating trust exists for estates that have assets to distribute. If there are no assets to distribute, there is no liquidating trust. You can Google this on your own. You shouldn't follow anonymous people online. If you're on this call, you should be leading those people with the facts that you have. You should not be trying to get your information from them. They don't have the facts. Everything I'm telling you is backed up by the documents, or you can just simply use Google. So that's document 2507, page 70, under binding effect of the sale order. So that is the proof. And if you go to that same document under title to the acquired assets, and we covered this in the previous video, it's title to the acquired assets in document 2507. They explain that those assets belong to the debtors, which is Sears Holdings. So we liquidated. We've got about 15 retail stores left, and we have Sears Home Services. We have the credit card. We have the proceeds from Die Hard, which was $200 million. We have Innovel Solutions, which was $1 billion. We have $2 billion from the credit bid and from Eddie Lampert assigning his claim. We have roughly $1 billion from the sale of real estate and roughly another $1 billion from the tax credit. That's roughly $5 billion from publicly available documents. That does not include any money from the online business. That does not include any money that I can't see or is not publicly available to me. So that is the minimum amount of money that is in the estate according to the publicly available documents. So far, it's unrefuted by anybody because everything is backed up by the documents. I think I'm done, Blair. I'm going to take questions, but I'm not taking any questions that you can get the answer from your broker. I don't know what's happening with SoFi. I don't know what's happening with Schwab, Morgan Stanley. So you want the questions to be Sears related. Any questions about what a bond is, anything you can Google, you have to go out and do the work on your own, because we want this call to be productive and we want people to be focused on this particular investment and learning as much as you can about this particular investment. So if you are a new investor, you want to make sure that anything you don't understand, you Google and you take notes, and don't waste your time online. As of 4, 5, 6 months since we've been doing these videos, I don't think anybody can show me anything productive they found online. And it's a little challenging for me to watch or receive emails and texts about stuff that's being posted online when all the facts are already on these YouTube videos provided by Blair and Rod in the group at Triangle Blockchain. So Blair's going to take over from here and start the questions, and make sure there are no broker questions. Anything related to what happened with your broker completely is out of my wheelhouse. Okay, Blair, go ahead.
Okay. Okay, everyone. So again, we're going to enter in the question and answer section. And again, this section, remember, if you have a broker related question, that question probably won't be answered tonight. Okay. You have to refer back to your broker for that. So questions about SHLDQ, about the bonds, ask away. So we'll go with Miss Lyles. I believe she had her hand raised first. How you doing, Miss Lyles? Could you unmute yourself? Yeah, go ahead and ask your question, ma'am.
Okay. I may not know how to ask it right, and if it's not appropriate, it's okay to tell me that. But I'm interested in, I remember on one of our meetings, you said that the shares were going to be turned into transformer, that we might get some shares from that. Is that an appropriate question here? Because I'm sure I'm not going to get any from the bonds.
Well, you're not. We're not sure. We're not sure you're not going to get anything from the bonds. You know, we're not sure of that yet. No, so here's what it is. No, I'm sorry. Go ahead. Okay, no. So let me ask you your question for you. Keep your mic on. So, Transform is the entity that is holding the remaining assets belonging to the bankruptcy estate. Okay, that's the name of the company. So write this down: transformco.com. Transformco.com. It's TRANSFORMCO.com. You go to that website, you follow that website, that's what we own. That is where everybody should be focused. You should be focused on the entity we own. The bankruptcy is over. So if you follow that website, and if you read the press release from March 17, 2020 on that website, everybody write this down. March 17, 2020, that press release on transformco.com, that is the business we own. I want you to go through that website and tell me if that looks like a business that's failing or not making a lot of money. So make sure you do that.
Will you spell it again, please?
Yeah, somebody Google and put that in the chat for me. Transformco, TRAN, transformco.com. If you put new SEARS, NEW, SEARS, Transform, it'll come up. Transformco.com. That is where everybody should be focused because that's what we own. Somebody put it in the chat as well. That's where you want to be focused, not on StockTwits, not on Seeking Alpha, not on Reddit. That is the business we own, and that is what is in the liquidating trust, including the cash. So we may get some stock with our bonds. We might get cash and some stock. We might get cash and some other things, but we're not 100% sure yet. But that Monday situation makes it appear as if we're going to get paid out in cash. Or some of the bonds might pay cash. For example, the bonds that are publicly available to everyone on E-Trade are most likely going to be paid in cash. But earlier, before the bankruptcy, there were some different bonds called PIK bonds, P-I-K. You can look this up. Paid in kind. Paid in kind bonds also exist for SEARS, but you can't purchase them. I have some, Eddie Lampert has some, and some of the other investors, but you can't buy them. But a PIK bond, P-I-K, if you see that on a bond, it's paid in kind. And they can pay you in stock or they can pay you in cash. Sometimes it's optional. So that's what a PIK bond is. A PIK bond is a paid in kind bond, and it can pay you in stock. But we don't have those bonds. The publicly available bonds are cash bonds. They're cash bonds. So Transform is your company, transformco.com. Now, I think they're going to change the name back to SEARS or SEARS Holdings or something like that. But that is the website that you follow, and that business is doing amazing. And they are debt-free as of March 17, 2020. Look that press release up, and you'll see the information. All right. Did I answer your question? We good?
Yes,
okay, go ahead, Blair. Okay, thank you, ma'am. Okay, go ahead, Blair.
Yeah, I'm just a talker and got my own mic muted. Ain't that something? Trevor, go right ahead. Thank you, Ms. Lyles. Thank you very much for your question. And Trevor, you go ahead. You have your hand raised.
Excellent. Thank you. Hey, Eric, I appreciate you doing another call, especially after that excitement earlier this week. But question for you in terms of the value, in E-Trade, I saw the 102 for each bond. Curious your thoughts on whether that $2 above par is associated with the interest, or is there more interest, considering that, the bonds are due in 2019 and it's now 2022, maybe 2023 when we get our payout. Is that interest going to continue forward for 3 or 4 years? Or is the $2 associated with the negligible amount of interest that would have occurred in 2019 prior to the bankruptcy?
I don't know how to answer that. I can't really answer that because I can't tell you for sure if that was the correct amount, that 102. But I can tell you that somebody gave that information to E-Trade, but the bonds matured, 2019? So 1 year of interest behind the actual 1 year of interest after 2018 would be more money than that. So I know that number will be incorrect just based on that.
Right.
So
okay.
we'll just have to wait and see.
Okay, perfect.
We'll
I just wanted to get your thoughts. Thank you.
Yeah, but you're right. That 102 was weird. I was actually thinking the same thing. Like, okay, what's this here? Now it could be that they're paying, the par plus 102, and the interest is going to come in another payment. That could happen as well, Trevor. That could happen too.
Okay, that's good to know. Yeah, I assumed that it wasn't interest associated, and then it was just a glitch in the system. But maybe it has some significance that we'll learn about in the future.
Oh, no question. No, somebody, E-Trade told me somebody provided them with that information, and it was an outside source that was related to SEARS and the bonds. Somebody provided that. That wasn't E-Trade pushing buttons. Somebody provided that information. And I think they provided it too early. I think they have it, and they provided it too early because E-Trade is the only brokerage that withdrew the default, notified the bondholders that the default was withdrawn. And I bet you every broker has that information. They're just not paying any attention to it because it's SEARS Holdings.
Right. I tend to think that you're right. E-Trade has seemed to be the consistent one in delivering the information earliest.
Right. Absolutely. Absolutely. All right.
Okay.
Thank you,
Perfect.
Trevor.
Yeah, that's
Okay. Go ahead, Blair.
Thank you very much, Trevor, for your question. We're going to move to Daniel. Daniel, you have your hand raised.
Yeah, Eric, can you hear me okay?
Yes, I can. How you doing, Daniel?
Okay. Yeah. Thanks a lot for doing this. Merry Christmas, Happy New Year for those that celebrate. Yeah, I just wanted to say in line with what Trevor was asking, I was kind of, when I saw that flash at the 102, I was thinking it might be like 108 or something with the accrued interest. But on another note, I came across in the Reddit chat on SEARS, just kind of verifying what you were saying. One of my favorite posters named Shakespeare. I don't know if anyone knows who that is, but anyway, he came up with an article printed. It was actually from 2015, I believe, but it went through the real estate holdings of SEARS, and it showed different, like maybe 5 different. The article was about 15 pages long, and it went through about 5 different ways that they valued the real estate assets, and it, like, the most conservative on that, I think, was like 34 billion or something. I think it was between 26 and 34 billion on the real estate. Again, that was back in 2015. So my question to you is, do you know how much of that actually went to Seritage? And then also, do you know if anything happened with Seritage as far as merger with SEARS?
I covered all that in one of my articles on SEARS Holdings, but nothing's happened with Seritage as of yet.
Okay.
And the real estate valuation that you read off is in line with what I covered, the numbers that I put up in my second or third article on SEARS Holdings. Now, Seritage, the valuation of the real estate at Seritage was $2.5 billion at the time of the spinoff. That was the valuation. But if you look at the footnotes of the annual report of Seritage, that does not include any value for 2,500 acres of land. They put it at a 0. They said, we just don't know what it's worth. 2,500 acres of land is about 100 million square feet. That would make just the land the 3rd or 4th largest real estate investment trust in America. So we've been selling land for an average of $2 million an acre. You take 2,500 acres and you put $2 million on it, You got $10 billion at SEARS for just the land. That's been the average sale price if you look all this up on your own. So the land was listed at zero at spinoff. And it's all documented and it's all disclosed. So SEARS has a lot of real estate, and SEARS Holdings has a lot of real estate left as well, as we covered in one of the previous videos.
Okay, yeah, I just didn't. I know in the previous video we were talking about, or two back, I think we were talking about SEARS possibly buying Seritage, and then I guess that didn't happen, correct?
That's just my speculation. Of course, it hasn't happened, but that's just my speculation.
Okay, thank you, Eric. Appreciate the time. Great video. As
No
usual.
problem. You good? Happy holidays already.
Thank you, Daniel, for your question. Jason, do you have your hand raised or do you take your hand down? Oh, okay. Daniel, do you have another question or are you just removing your hand?
No, just remove the hand.
Okay, okay. Anybody else have any questions? Please raise your hand. Go right ahead. We got the man here, Eric Moore, answering your questions. Anybody? We have over 68 people here, I believe. Somebody's got a question there. Eric Moore. Eric Moore has a question for Eric Moore. Please go right ahead.
Eric Scott Moore. All right. How you doing?
So I just had a question about what was the book you mentioned? You mentioned
can
you get closer to your mic, E? Okay.
Yeah. Can you hear me now?
Yeah, you sound real far. You said not you, Eric. I'm talking to Scott Moore.
Okay.
Can you hear me now? A little better.
Yeah, I can hear you.
Okay, go right ahead. Go ahead.
You mentioned a book and it had
There you
Phoenix
go.
in the title. I wanted to know what was the title of that book.
Okay, somebody put this in the chat. The Phoenix Approach by William J. Grace Jr. The Phoenix Approach by William J. Grace Jr. You want to read how Buffett does it first.
Okay, thank you.
It's an old book. It's not on Kindle. It's an old book. It's not on Kindle, but it explains how to invest in companies in bankruptcy and so on and so forth. Okay, Eric, thank you.
Okay. Thanks very much, E. Anyone else has a question? Charles, you have your hand raised. Go right ahead, Charles.
Hey, good evening, everybody. Good evening, Eric. Thank you for coming tonight.
Oh, good evening. Likewise.
You hear me okay? Oh, good evening.
Yeah.
I had a question for you. So I know at this call and the previous call, you mentioned that the bonds are priced at about $1,000 per bond. And I just want to make sure we're clear on the calculation of that, because I know at one point, and maybe that's changed, but when we first got involved with this, we were saying that we thought each bond would be would basically break down to about 120 shares of SEARS stock or Seritage stock whenever this comes to fruition. So is that still not the case anymore? If we're saying that the bonds are going to be $1,000 per valued at $1,000 per bond?
Okay, so let me make sure I'm explaining. You got to write this down. So several people misunderstood what I said. Okay, there is an option to convert bonds to stock. There's an option for the PIK bonds, P-I-K. That's what I was telling Ms. Lyles about. You don't own any PIK bonds. Do your bonds say P-I-K at the end on them?
No, not from what I've seen, no.
Okay, so you can't buy PIK bonds unless you were a part of this prior to the bankruptcy. So the bonds you're purchasing for $25 have a $1,000 face value. You got to write that down, and you can look up, what this means. The bonds are $1,000 face value. You're technically buying two $500 bonds, but they're sold in $1,000 lots. So when you pay $25 for a bond, you have $1,000 worth of a bond. Okay, that is the face value of the bond. The money to pay the $1,000 plus interest is already transferred. That's why I say it's like buying a winning lottery ticket from a person selling it to you for $25. So don't worry about the stock conversion. That's irrelevant. If that happens, you will know about it. It'll be informed. Is it possible that you get a notification and they say, would you like $1,000 cash or would you like $120, 120 shares of stock or something to that effect? That is an option that exists for another set of SEARS bonds that you don't own. So that's nothing for you to focus on. And if that option becomes available for the bonds you own, it'll be a public notice. It'll be on the website, et cetera, et cetera. So the bonds you're purchasing are worth $1,000 face value. The price has crashed to $25 since the bankruptcy. And my information shows that they have the money to pay $1,000 plus interest, and you're paying $25, $30. You see the difference, Charles?
I do. So if I gather what you're saying correctly, if you want to have we'll say $1 million worth of value with these bonds, then you want to hold at least 1,000 of these bonds. If I'm understanding
That's right.
what you're saying.
1,000 bonds is $1 million. Right. That's right. That's right. You got it.
Okay. Fair enough.
All right.
Thank you.
All right. Good to go. Thank you, Charles. You're welcome. Go ahead. Go ahead, Blair.
Okay, thank you, Charles, for your question. We have Jason, and then after Jason, we'll go to Theo again. But Jason, go right ahead.
Hey, Theo, if you want to go first, that's fine. But I guess I'll go first. So kind of piggybacking off of Trevor's comment and then kind of Dan's a little bit. So let's just say that so Eric, if it's 102, let's pretend that, right? To me, that makes a little bit of sense because there might be some sort of probability that it's not going to go to 136% or whatever 8% is for X number of years, right? So I can understand that. Now, when you mentioned the conversions, right? So I think the 2018 bonds convert at $5 a share. Is that true?
The PIC bonds, yes, but nobody here owns those bonds, right? They converted $5 a share. The PIC bonds, not the bonds that the people on this call own. Correct.
Well, but I think the 2018 2Ls, right? They convert it 5, right? And then the other ones convert at $8.33.333, right? So like 120 shares per one, right? So I guess my question, I'm kind of framing this, but my question would be then, do you think, so this is speculation. So I'm not saying that you know this because no one knows this stuff, but do you believe that it's that the bondholders will then convert the shares to then go into transform, or do you think that it's going to be bondholders that go into transform, or do you think it's going to be both that go into that the bonds are going to get paid and then the shareholders go, how do you see it playing out? Because I can see it one way, I can see it another way, and I can see it both ways.
I have no idea. All I know is that the bond and district trustees have the money to pay us out. And I don't excuse me, I can't imagine that Eddie Lampert is going to give stock. I've seen bankruptcies where they give you an option. They say, do you want the conversion or do you want the cash? I could see that happening. It's happened in multiple bankruptcies. They'll say, we can give you $1,000 in cash, or we'll give you, or we'll pay you the book value of the stock, for your bond. For example, let's say the book value of the stock is $100 a share, and your bond is $1,000. They'll give you 10 shares of stock or $1,000 in cash. I've seen those conversions happen, but I won't know that until they announce it publicly. I've seen that happen before, but I have no idea if they're going to do that or not.
Okay, yeah. The one of the reasons I ask is because didn't I think that you mentioned in one of your emails and during some of the calls that Eddie, Lamp or whatever. I don't want to call him Eddie because that's not like I know him, but Edward Lampert, whatever. That he actually converted a lot of his bonds, right, to shares. And so to me, that's a signal that maybe it might go that way. I don't know if you.
Yeah, basically, I'm
what you
sorry, let me
think.
interrupt 1 second. What Eddie's doing and what might happen. Well, at the last annual meeting, he told everybody he was taking PIK bonds. So he converted his regular bonds and all his debt into debt with the option to convert it into stock. But he announced publicly in the bankruptcy documents that he converted roughly $2 billion of his debt into stock. So I don't know. I don't like to speculate. I don't know what the offer is going to be, but I know we're going to get full payment. That's all I can say. But I don't know what he's going to do. I don't want to say he's leaning this way or that way because I can't speak for him. But I just know we're going to get paid in full, and we're going to get $1,000 worth of value, whether it's in bonds, whether it's in stock, whether it's in warrants. I know we're going to get paid in full based on the math. That's all. But I can't speculate on what's going to happen. We'll see very soon.
Well, speculating is fine. I mean, that's why I'm asking. I mean, I know that you're just speculating. At this point, at this point, right? Like I'm asking you speculating questions. But the thing is,
I know, but I don't want to I can't tell you. I don't know what he's going to do. I just know I've seen that option available. That's all I can say. But I can't tell you 50-50 flip a coin. I can't tell you. I don't have any thoughts on what he's gonna do. But that option is available in a lot of reorganizations. Yeah.
Yeah, you don't have the magic 8-ball. That's perfectly fine. So what's your play right now? What's your play? Like if you were to have an extra grand right now, what would you do? Or would you
Well, what I'm doing now,
the bonds?
I'm buying bond. I'm buying bonds until they're no longer available.
19s?
Yeah.
The 19s?
I'm buying all the bonds are worth the same. So I'm buying the cheapest bond available that day.
Right.
And so far it's the 19s. All bonds are equal. No bond is superior to another bond because all the bonds, the money to pay all the bonds is already in hand. So why would you pay 90 cents on the dollar for a bond when you can get 25 cents and it's the same $1,000? So It's an ongoing opportunity. And the people who understand it's an ongoing opportunity, they're buying on a regular basis because you're buying $1,000 worth of value for $25 or $30. Now the 2018 and some of the other bonds, they're selling for a higher amount because people don't know the information I just told you. They think those bonds have a better chance of getting paid. All the money to pay all the bonds has already transferred. I proved that in the last video. So why would you pay $100 a bond to get 1,000 when you can pay 25 or 30 and get 1,000?
Well, I bought a bunch on Tuesday, so I'm with this thesis. So, anyways, thank you for your help and everything that you're doing, and happy holidays. I'm gonna still stay online, but I want to cede my
right.
time to Theo here. All right.
Okay. Well, thank you very much.
Hey, good evening, everybody.
Ahead,
Hey, my question is real simple. Earlier, you mentioned the formula to find out the book value of a company. What exactly is that formula, and what resources do you use to find that information to input into the formula?
You just Google book value of a company, just like I did with Tesla. Sounds too easy, don't it?
Yeah, it does. All right.
Yeah, well, that's the whole thing. Sometimes it's not complicated. It's just they have to keep the knowledge away from people so Wall Street can keep making money on people speculating without knowing they're speculating. So some companies are more complicated, but the three metrics that you want to go when you're value investing and you want to get the book, How Buffett Does It, the three metrics, the most important metric is book value. That's the assets minus liabilities. It's very difficult to lose money when you buy. Let me give you a company to look up that I did in my last value investing class. Look up this company's book value. Go to their website and look up their presentation and look for their tangible book value. The stock symbol is PGRE. PGRE, Paramount Group. You'll see these big high-rise buildings in New York and San Francisco. That stock is $6 or roughly $6. The book value is between $19 and $21. So what you're doing, Theo, is you're paying $6 for something already worth $19 or $21. You see the difference?
Yes.
And we need that company to drop in price 66% before you're even at break even. With Tesla, you need the stock price to drop 90% in order to be even. So if Tesla was $6, I would buy it because it's worth $12.62. So to give you the same ratio, you could buy Paramount Group, the company I just gave you, for $6 a share, and you get more value than buying Tesla for $150. Tesla's only worth $12. You're buying $21 or $19 worth of value for $6. Or you can pay $150 for Tesla on Monday, and you can get $12 worth of value. You see how backwards that is? Thomas, mute out. Thomas, mute out. So go. So you got me, Theo, to answer your question?
Yeah, I did. My last name is Thomas, so I thought you were telling me to mute out too. I'm sorry.
I was telling Thomas. So Theo, so you want book value per share to be the most important metric, earnings per share, and price to earnings. Those three, but book value is the most important. If the book value is over, don't even look any further. That's the net worth of a company. The net worth of a company. And Blair's got the value investing classes. You can contact Blair and he'll get you a couple of the classes and let you know the prices. If you just get the first class, I promise you, you'll get the second, third, and the fourth one. And I walk you through the investments that we did last year. Thomas was in some of them. Some of the girls from Personal Purpose, they were in them. And the investments we bought so cheap that we're not down now because we bought Mr. Cooper. You can look up this company right now. It's still dirt cheap. COOP, Mr. Cooper. We bought that company for $6.50 when it was worth $22. And they were earning $6, $7 a share per year. So that's the equivalent of buying $1 million house, paying you $1 million of rent after expenses. That's an insane amount in a real estate transaction, correct?
Yes.
You can't find that in real estate, but you can find it in stocks. It just takes a little patience, and it's not complicated like Sears. You can look up Paramount Group right now. It's grossly undervalued, and nobody's paying any attention to it. And if you look up tangible book value, if you scroll through that presentation, you'll see the numbers I'm talking about. And sometimes you can just look them up on Google. But it's a real nice presentation, and Blair can get you that first class as well. But book value is the most important metric. It's the assets minus liabilities. All of the hype about how great Tesla's cars are. And I'm not piling in on Tesla. I could talk about Carvana. I could talk about any other company. You want to know what the underlying asset is actually worth. That's it. It's like, so the equivalent of, and then I'll be done. The equivalent of what people are doing in the stock market, it would be like a guy coming up to you, Theo, and saying, hey, man, I like that G-Wagon you got. What'd you pay for it? You say $250,000. Hey, man, I'd like you to sign over the title to me. How about I give you $5,000? You would never do that because you know that he's going to own your G-Wagon if he gets the title, right?
Yeah.
But Theo, when you buy a stock and you pay $250,000, he giving you a 1982 Toyota. But you think you bought a G-Wagon. You see what I'm saying? So
yeah,
the stock is like the deed to the house, the title to the car. And nobody is selling a G-Wagon for $5,000 because they know if they give you that title, you own the G-Wagon. Nobody's going to give you the deed to $1 million house for $200,000 because they know that gives you ownership of the house. But every day in the stock market, people will sell you something worth $12.62 for $150. And you know why it works? Because people are focused on if it's going up or down, not what it's actually worth. So that's the key. And I go through all that in the value investing classes as well.
Okay, thank you.
But PGRE Group is a real good undervalued company right now that you can look into.
Thank you. I appreciate it.
No problem. Okay, go ahead, Blair.
All right. Thank you very much, Theo. We're going to go with Jemiah Jackson. You have your hand raised?
Hear me?